Shares of Royal Caribbean down sharply in the pre-market. An open at $290 would take you back to late June or so. They did report a profit beat. They raised the guidance. The outlook, though, did fall short of some Wall Street expectations. Joining us first on CNBC this morning is Royal Caribbean CEO Jason Liberty. Jason, thanks for joining us. Good to see you again.
You too, Carl. Good to see you guys.
Can you explain to viewers why the guidance might not have met some consensus?
Well, I can't really manage consensus, but I will tell you that we are really excited. We had a great third quarter. We beat for the quarter, and we also raised for the year. And we gave some initial trajectory in terms of what we see for 2026, which is supported by incredibly strong demand for our brands and for the vacations we deliver.
Right. And we think 26 might have a 17 handle in the way of guidance?
Yeah, we expect it to have a 17 handle. That doesn't mean that we expect it to be 1701, but we do expect it to start with a 17 next year when we guide.
You know, I got to tell you, Jason, you were on recently in March. You were on Mad Money, and I am concerned that you were talking about the idea of when travelers are booking cruises much closer to the actual date. Can you tell me exactly when people are booking and what the significance of that is versus longer-term booking?
Sure. Well, great to see you too, Jim. So first and foremost, what's driving a little bit of that behavior of closer in demand is also we have more short product experiences. So what we've seen in the evolution of our guests, especially our younger guests, is they like to go on shorter vacation experiences, and they like to do them more often. So some of that close in demand that we're seeing is just that incredible thirst to have those long weekends or those short periods during the week. So that's been really kind of the main driver of why we've seen stronger close in demand in those booking patterns. So a lot of it is what we're driving behaviorally to match where the guest of today and tomorrow is looking to go. When you look at our other products like the 7-night product, European products, etc., those book much further out. And more in the typical cycle, they do tend to book further out than what we saw many years ago.
Okay, good. And then just when I think of Royal Caribbean, I had Viking on recently. Royal Caribbean is cheaper. It's really what I regard as the everyday person's greatest vacation in the world. I think it's a true bargain, particularly versus hotels. I'm wondering whether, when I look at the decline, I know that you're doing so many things that are good, but the takeaway will be today is that the consumer is now really on the ropes because they couldn't go to Royal Caribbean. Tell me why that's the wrong narrative.
Yeah, well, I think it's the wrong narrative for a few reasons. One, we have tens of thousands of bookings every single day, so we're seeing how they're planning and dreaming about their next vacation experience, and so they're very much in that zone. They are booking, and they are paying higher prices to do so. We also have about 170 to 180,000 guests on our ship every single day, and we're watching them spend in all the different onboard venues that we have, as well as a land-based experience that are there. And those behaviors continue to be very strong. Also, when we interview them, they have great jobs, they have great balance sheets, they're saving money, and of course, they want to make sure that they're able to go out and have incredible vacation experiences. And they trust us and our brands, which go from that contemporary family market all the way to ultra luxury with Silver Sea and Expedition. And you're seeing strong demand across all those brands and all the different products that we offer.
How about international demand? Is any weakness of inbound international tourism being offset by international brands?
Yeah, well, we saw a little bit of that earlier in the year, especially from Canada coming down to South Florida. But most of our sourcing follows our deployment. And so when we look at guests coming in from outside the country, it's about 20% that come into our Caribbean deployment as an example, while European deployment is over-indexed more towards the European consumer. So we're seeing, because of our deployment, the way that we manage our business, any type of challenging sentiment is not something that's impacting our business.
Jason, stocks managed to recover a little bit. We'll watch it into the open this morning. Always good to have you. Thanks for coming on, explaining some of the quarter. Jason Liberty, the CEO of Royal Caribbean.